Okay, I think that the last thing that I want to, I mean, the few things that I want to show you is the, I need you to report the, I need you to report this one, the cash flow. And of course, you need to report this, what we call the income statement. Okay, based on your income statement, I can say that your company here is based on the, uh, if I look at here, it's based on the thing that you choose here. Okay, you see, you choose the number two, which is sorry, number one, manufacturing. Okay, so if you choose manufacturing, so no wonder that I can say that your we call the expenditure, you minus the admin, marketing, and all other expenditure. Therefore, you don't have the operating expenditure. If you choose this one as number two or number three, would probably that your there will be here there will be what we call operational expenditure. Therefore, that operational expenditure actually taken from here. It taken from here. So they bring here. If you choose the number two or number three. But since you choose the number one, operational expenditure here is brought to this section under what we call production cost. Okay, so you don't have to worry about this one because this one is auto generate. Right? So do we make profit? We want to know. That's the key. Do we make profit? So we have the cost of statement, right? You can simply produce this figure, copy paste saja. How do you copy paste? Buat macam ni je lah, copy paste. Copy, lepas tu paste, letak dalam your words. Okay, you see that this company is number two, kan? So that they don't pay the tax. So you make money from there lah. Okay. So you see that this company make profit or loss? They make profit. Okay. After they make the sales here, sales that you made in the marketing, minus all the costs here, including the cost, operational cost here. Actually, that one should be here if you will choose number two and number three. You make what we call the net profit before tax, 27,000. But since you don't pay the tax because you choose as a sole company or the partnership, therefore you make net profit of 27,000 for the first year, and the second year 56, and the third year 80,000. So this company is okay. They're making profit. That's the key. Okay, you must show me you make profit. If you don't make profit, what do? Okay, meaning that you have to minimize all the thing that you have here, and you maximize your sales here. How you do that? How do you do that? You need to adjust here. You need to adjust here. So this one is sales that just now, the sales that you make here. Okay, 55, 56, right? So you need to increase this number. At the same time, you need to decrease all the number that you have here. Here, here, and here. Especially this section. You need to minimize it. Because if you don't believe me, you see that this value, how much is it? Let's say 4820 plus 3000 plus 500. Okay? Times, let's say 12. So that's the cost that you have to pay only for the marketing only, right? So you can see that this value 998480 actually equivalent to this value, this one, almost equal, right? Except we have plus minus, right? So I may say that I said to you earlier that you must maximize your sales and you must minimize this kind of expenditure. And the worst part about this expenditure that comes from admin. So somehow you need to work on the admin. Admin, which part? Admin, this expenditure, right? The land building. So if you found that land building, of course, that can be financed by the on existing asset, but it is part of the cost. So if you found buying land and on the land building is expensive, then you need to minimize the cost. Let's say 50,000. That can reduce the cost. You can make profit. For example, let's say I put 50K. Okay. Okay, you will see that here you will make a bigger profit in the income statement. See, you have a bigger, because now your administrative expenditure has fallen to the larger to the smaller numbers, right? So that's how we do it, right? I hope that you understand how to adjust the things. and they are interrelated each other. Okay, now, so somewhere somewhere you have to make adjustment here. uh, Somewhere that adjustment comes either from this part, okay, or this part, but normally it comes from this part. So you try to make some try and error in order to make the profit, eh? And then we go for the balance sheet. Balance sheet, as I said to you, asset here, all the asset, what we call the fixed asset plus the current asset, right? They must equivalent to the equity plus equity. Don't wonder that um, if you found that they are not equal, somewhere is missing. I mean, some information is missing. Eh? So if you look at here, this total asset for the first year, 247 474. Okay, but in terms of asset, I mean total equity liability, you have got about 237. So we try to find how much is the differences. 247 474 minus, all right, the total equity, which is 237474. All right, so about 10,000 is missing. Okay, where this money comes from, I mean goes to. So you have to find that uh, somewhere, I mean in your capital here, I mean, in terms of your equity or liabilities, there must be some what you call error. All right. So I guess that you have to work on the things, right? But um, I think that we need to go to the next part that called the why this thing becomes zero, because I said turnover or the things that we call here. This one, this one is zero. That's why they are zero, right? So you have to find the value. If you have the value, then therefore you will have the value. Okay, so that's this one is simply a financial ratio analysis. All right, is this company good? This one actually represented by the graph is the same. Okay, so we say that this one is blank because, as I told you, they are blank in inventory. See your gross profit margin increasing over the years. This is a good company. Net profit margin increase. Return on asset increase. The return on equity also increase. Very good. Debt to equity, meaning that compared to your debt, compared to your equity, this is decreasing. Therefore, the company is good. This one, 2, 3, 4. If you see increment, that one is good. Okay. This one, kalau you see the decline, that means this is good. Debt to asset also decline. Very good. Time earners, I think this one is simply interest that you paid to the companies. I want to highlight the things. So the only missing thing that we have here is the balance sheet here. We could not find the balance between these two. In fact, it seems that we lose some what we call the value here. I guess that I'm not too strict with that. But I think you have, if you can find the reason why you lose that 10,000, let me know. So that we can work on the things together. But I think the rest of the calculation they all are correct. But one missing piece here is we cannot find the balance between the total asset and the total liability. So it seems that our liability, I mean our this is produced figures. So I think that somehow there is unbalance. Again, we need to find the balance. Okay, I think that's it for today. I hope that this will help you to finish your report on financial.